Hello everybody, welcome back to another video, and I'm going to again analyze the Xauusd on 5-minute time frame, and today is the 3rd of June 2025. Last night market spiked up and then it entered into the channel. After these two touched, I expected for another touch of the trend channel line, so I bought these pullbacks here and these double bottoms. So this is the first bottom, second, and another bottom, which is a double bottom. Then I bought this pullbacks and I sold this pullbacks because I believe this is in a spike, and after a spike we enter into the channel phase. But there is a point here that is really interesting. Market rallies upside in the beginning of the New York session. Then this Asian session starts, and after Asian session starts, market was outside of this channel. So whenever market is outside of a channel, you shouldn't just necessarily expect for higher prices. Then market created an triangle, and it broke above it. It failed and came back down. I put another sell setup here. I sold the market for the expectation to touch the trend line, and it hit my profit target and even rallied down more and touched the bottom of the channel, the first bottom, the second bottom. But sounds like traders didn't see this as a good buy setup, so nobody entered, just sellers took the profit target, and then market rallied the downside again. And if you just take a look at the 5-minute time frame, it's in a spike. And when I saw this in the morning, I realized if this is in a spike, a new market cycle has just begun. So I started to look for patterns to trade it. First of all, let me show you something here. Market was in a trending down, which is in a spike in higher time frames, and then it created a rising wedge, which is a bearish flag. So it just broke above the trend line. But guys, don't forget this as a point. The first breakout of the channel is likely to fail, which is the case here. So the first touch of the rising wedge, the second and the third is the best place to take the trade, specifically if it overshoots the wedge or channel. So you could have just sold this low. So I'm going to just put my sell stop right here, then put your stop loss above this candle. Then you see if this is the entry, you can expect the market to touch the bottom. 1 to 1.5 risk to reward ratio. So market comes back down. A lot of traders take their targets, but do you have to just buy these two bullish candles? I think such candles are act like bull traps. Like here, I'm going to talk about it a few minutes later. So this is a bull trap. Lots of traders see this, and when they see this, they say, oh my god, trend line is broken. Okay, market has come back and pulled back, and this is a good signal. And this signal, the signal which is a pin bar with an entry bar, usually in books you see lots of people talk about it as a good buy signal. Yes, a lot of people go long, and they are happy here. But look at this candle, a lot of shadows. It means a lot of people have got out here. Then the next candle is a bearish, surprising candle, and then they get just stopped out. All right. After this a spike, I know that we have entered into the channel phase. So take a look at this channel. This spike comes back. So this is the first touch, comes back up, comes down. The second touch goes sideways, and the third touch. And just take a look at this. What happens? It's in a spike up with a lot of momentum, but when it breaks above the 20 minutes 20 EMA, and also breaks above the trend line, it starts creating some doji candles, which is the sign of hesitation. People don't know whether they have to go long or not. And again, for this channel, this is the first breakout, so you shouldn't just jump into the market and buy it. You should patiently be waiting, because lots of sellers who have sold, for example, this specific candle, this one I'm talking about, lots of people who have sold this will get out. They will get stopped out, and also lots of people who have their stops above this highs will get out of the market, and then market sells off again. And take a look at this candles here, series of bearish candles with each bar closing near its low, and this is an exhaustion gap after a spike and then channel. And after this series of bearish candles with a lot of momentum, it means lots of traders are getting out of the market, because they see this is a really good opportunity to take profit and get out. And then look what happens, market comes back up and just corrects itself for two legs. This is the first leg, A, B, C, and then the second leg. Something interesting here is that we see this part as a breakout, and I can't agree with you no more. And when market sells off again, I look for some deeper correction, and also I can call it a major trend reversal setup. Okay, so market sells off, comes back up, but these two bullish candles aren't trustable to go long. So I always wait for market to come back up, and little I wait market to breathe and cool down, and then I go long with this candle. So if I was in the market, I would go up here and also on this candle, and you could just wait for the second leg. So if this one is the first leg, let me write it. This is the L1. Sorry, this is the L1, and this one here is the leg 2 for deeper correction. Why this happens? Because market breaks above this channel clearly here, but it's a bull trap. Market sells off back down, lots of traders go short, but to me, this I will wait always for a MTR, major trend reversal, because the trend line is broken. This is the first leg, and I believe there has to be another leg. So you can just take the trade, put your buy a stop here, and even when it comes back down, you can even buy these candles. As you see, this candle has come down, lots of trader has gone up and then push the market higher, and even this candle is another good buy signal. However, with these dodges, it tells me that this buying pressure is not that trustworthy. Specifically after these two candles, you can see another reversal hammer. So it's not a spike, so you should get out of the market immediately. Something else that I need to tell you is that if I just draw another line from the bottom of from the top of the starting point of the channel to the next breakout, it gives me this point. So if you see, market breaks above, comes back down, goes back up, comes back down, goes back up, and it fails with this candle. And these failed breakouts worth taking the trade. So you see, when it just breaks above, it comes back down to the channel again and sells off. But let me just show you something. If you remember the market cycle, there are always 3 phases, and every cycle always begins with a spike. And in this case, this bearish sell-off is a spike. Then market enters into a channel. Okay, let me write it. This is the first touch, then the second touch here. It's the second touch, and also the third touch. Okay, the third touch. And after third touch, which normally professional traders expect channels to finish, so they don't look for shorts anymore. That's why this rally upside has been created by bulls. But when it breaks, the first breakout is not usually reliable, so lots of traders wait for lower prices to buy. So that's why a lot of people waited here, and also sellers took profit. Then for this place, it overshoots the trend line. Now with a double bottom, they expect for another leg upside. Okay, and when it comes back up, if this is the if this one is the channel with 3 pushes, then we know that there has to be another phase, and professionals know that after the channel we enter into the trading range. Okay, so this area here is the trading range, a spike, and here is the channel CH, and now trading range. And when market enters into the trading range, what happens? You should buy low, sell high, buy low and sell high. That's why I have marked up these places as good buying signals. Market comes back to the bottom of the day, it rallies upside, makes pullbacks, and you should buy the pullbacks no matter what happens. You can even buy this close of this bearish candle, so, and put your stop here. If you had done this, you could have easily taken a 1, 2.5 and nearly 1 to 2 risk to reward ratio. And also when market goes back up, okay, it creates another pattern, which is a wedge, and at the top you can also sell the double tops, and in the bottom you can sell the double bottoms. First bottom here, for example, as an example, first bottom comes back down, the second bottom goes back up, comes back down, you can buy here, goes back up to the top of the trading range, because we know we are in a trading range. Now market comes back up, sells off. It's not a good place to take the trade. Wait for the market to give you the second entry, and the second entries are the best and more reliable than others. So if you had taken this and put your stop sell setup here, you could have just short the market. Even this bullish candles, you could just take the sell, you could sold it here and put your profit target in the bottom of the channel, and look what happens. A lot of people know we are in a trading range right now. Okay, so that's why these shadows in bearish candles have been created, because lots of people are taking profits and they create this also hammer. It's in the bottom of the trading range, and lots of people might have gone long, but I won't. You know why? First of all, this is a bearish candle. Second of all, even bulls couldn't push the price one tick to the high of this candle. That's why it's not trustworthy, and you have to just wait for minor double bottoms like here. Is there any pattern here? Of course not. So market sells down. Now this is a reliable breakdown, and what happens? You could have taken this sell-off, okay, and put your stop loss here, and if you had just entered here, you could just put your profit target here. What's the reason, and how do you know that market this is the best place to take your profit target? Let me tell you something, guys. If I measure from the bottom of this trading range to the top of this trading range, okay, let me change the color here, and I prefer for measure move targets the yellow line, and drag it downside to this level, and you see it, this is a measure mode. Market comes down and just hits all targets, and what happens? Market reverses back up. So the whites of the trading range, you can just measure it with a measure move target and put your profit target right there. And if it has been confirmed by another bearish candle, it tells you that you should just go short. But is this a continuation pattern? Of course not, because this is a breakout after the trading range, and these trading ranges act as a magnet, so market can come back down to this area. Let's see whether this is going to happen or not. So guys, I have marked this big bearish candle. There is a reason. This is the biggest candle that has been formed from the morning. Let me show you exactly what happens. You see, if this is in a spike, then market enters into the channel. Channel ends in 3 touches. Market rallies upside, but it's not a successful breakout, because still people don't know whether market wants to continue higher for higher prices or not, because still market is creating higher highs and higher lows. Okay, markets sells off, creates an MTR, sell setup. Then after this channel, we know that market enters into the second phase, which is the trading range. Market sells off, and take a look at this candle. This is an exhaustion gap, and by exhaustion gaps form when the cycle is at the end of its step and its phase. So there is no candle here. If you measure all of them, neither of these candles are as big as this last final candle. That's why we call it an exhaustion gap. And after exhaustion gap, if you see, this is a sell-off, market comes back up with this bullish momentum. And when I see such bullish momentum after such sell-off, and I know that it's an end of the cycle, now I can say a new cycle has just begun. That's why I can call it a spike. And the second phase, again, here is a channel. All right, CH, but I know that channels finish in 3 touches. Yes, we have a small channel here, 1, 2, 3 touch, comes back down. You can even say we might have entered into a trading range from just right here. Yes, I accept that. But I think this sell-off, this rally is going for higher prices. There is a reason, because we have a trading range here, and all trading ranges are magnets. And if this is a magnet, there is a tendency that lots of people look for higher prices, and I don't know where this pressure upside is going to finish. Right now, I can see a pattern being formed here, something like this. It's a falling wedge, and if it touches for another time, for the third time, is the first, second, and third, and if it couldn't break a downside and for lower prices, and it breaks it from above, that's a sign of buying pressure, and it means traders expect for higher prices. And if you see right now, market is creating higher highs and higher low, higher high, higher low. Even this low can touch the bottom, so it's a confirmation of strength. And another higher high, market comes down, and maybe another higher high. And also I can tell you, I can call this as a leg, which is the first leg, this rally upside, first leg, now a correction, and I can expect for another leg upside. First leg sell off, the second leg. That's why I have marked this place as the third time if market touches and even the top of the previous trading range we had here. So I don't know what's going to happen right now. Market might be in a trading range also. The thing is that we are at the end of the New York session, and but I know something. I know price action never lies, and I think there has to be another leg upside. So I'm gonna risk right here and just make a buy. I'm going to buy the market right here and put my stop loss down here, I think, below this dodgy candle, because this is in a spike. If this is a leg, market might come back a little, then overshots and going higher. And I'm gonna just put my profit target somewhere like here. There is also another thing that I need to mention about today. If I just drag this line and draw a line, right now we are at the top of this channel. Okay, this is the channel, and you see, guys, it even, we are in the channel, market comes back, touches these bottoms and a little overshots, then comes back up and touches it. But the thing here is that, should you expect for lower prices? Nobody knows. Market can come back up in this area and sell off again, and if it sells off, it is going to be really sharp with something, a sell-off like this place. Because if you remember, we had a line here, market broke and sold off again, and it also can come up here and sell off again. But as long as we have a trading range here, I think lots of traders are going to short, but market can come back up and take their stops, because right now we are in another channel, and since this trading range is a magnet, market can even touch the top of this trading range. Nobody knows. Let's see what happens. Thanks for watching this video, everybody. My name is Xauusd, and have a good night. Goodbye.